Hi everyone, this is Heidi Henderson with Engineered Tax Services. Welcome back. We've seen a new trend emerge, and given the rapid rise of AI and large language models and their capabilities, it's completely understandable. But in this case, these clients have used AI to perform a cost segregation breakout on one of their buildings. Two of them used ChatGPT, both for new construction projects, and one used Google Gemini on a project they recently acquired. They came to us and they were asking us to then sign off on or validate the work and to put our licensed engineering firm name on the report so they could file the return. When we tried to explain why we couldn't do that, we got understandably some frustration. And the questions that came out of that experience about what these AI studies actually contain and what the IRS Audit Technique Guidelines actually require, it's what the taxpayer's exposure looks like. There's a section 6662 for the CPAs out there, what the taxpayer's or the preparer's exposure looks like under 6694, because the CPA is actually liable if they sign off on something that's not defendable. Those questions don't fit into a 60-second video, and so I wrote a very analytical piece, a very detailed article, which is on our blog, on our website, and I've also published an article on Accounting Today. And I'm providing this longer video to walk through the substance and provide some education around this topic specifically. This video is for two audiences specifically. If you are a CPA who's getting AI cost seg studies brought to you by a client, then this is for you. But if you're a property owner who is trying this yourself or you're thinking about it, then this would be for you as well. There are some technical references in here, so you can share it with your CPA if you would like. I will signal which audience each section addresses as we go. But here's what we're going to cover. The IRS framework that controls cost seg quality on exam, 3 real studies. We're going to talk about the 2 AI ones that I mentioned, and then one that our team prepared, and then measure those against the framework. The specific exposures that each path creates for the taxpayer and the CPA, and the questions that we kept getting in our sales conversations. Can we just sign off on the AI work? And with the answer that the engineering credentials or the credential rules actually require. A little quick orientation. First, the IRS Audit Technique Guidelines. Most people, they don't know what those are, including a lot of the CPAs that have not read those. The ATG is a document the IRS published to tell its own auditors how to examine cost segregation studies, and it is hundreds of pages in length. The ATG, in plain language, that the IRS does not mandate a specific methodology for cost segregation studies. So, quote, neither the Internal Revenue Service nor any group or association of practitioners has established any requirements or standards for the preparation of cost segregation studies, end quote. That sentence is why this conversation matters. Anyone can call their output a cost seg study. The IRS does not regulate the credential or the deliverable itself. So when you get a quote, it is likely not an apples to apples comparison. It's vital to understand what you're getting and what you're paying for. What the ATG does is name 6 methodologies, ranked by reliability, and then they identify 13 very specific elements that mark what the IRS describes as a quality cost segregation study. Those 13 elements are the framework an examiner uses. They are not optional and they are not stylistic. It is the substance of the report itself. 5 of the elements matter most for this conversation. Element 1 is preparation by a qualified individual with expertise. Element 7, explanation of the legal analysis with citations. Element 8, unit costs and engineering takeoffs. Element 10, reconciliation to actual cost records. And element 12, section 1245, property identification or personal property. Each is analytical work performed by a qualified individual. It is not documentation collection. It's an actual detailed analysis. This is really why it matters. The first study, the first thing we'll look at is the Google Gemini study. This was a residential investor. They asked Gemini to do a cost seg on a $400,000 property. And here's what came back. There were 6 rows. They were in a spreadsheet with 5-year assets categorized as appliances, flooring, fixtures at $48,000, 7-year or miscellaneous equipment, $12,000, 15-year or land improvements, $40,000, and the rest at 27.5 years. Subtotal of $100,000 was bonus eligible. That's it. That's the whole study. No methodology, no preparer, no documentation reference, no legal citation. It is just a worksheet. And to be fair to Gemini, it never claimed that it was more than that. The taxpayer asked for a summary, and that's exactly what they got. Score that against the 13 ATG elements, 0. It doesn't attempt any of the framework. And the problem starts when someone tries to file a return that's based on this. The second one, AI study, more interestingly and analytical, the client is a developer of a $4.7 million new construction athletic facility. He gave ChatGPT a complete cost breakdown, including the contractor's invoices for every trade, and he asked for a cost seg report. The output was an Excel worksheet with 7 tabs that looked pretty interesting. The main tab, 38 construction trades, each with a reclassification percentage. Bottom line, 1.24 million reclassified to short life assets, 26.1% of the basis. The math reconciles. The structure, it looks legitimate. Now, let's look at what's at 0%. Tilt wall erectors, $479,000. Plumbing, $237,000. Construction management, $440,000 between 2 firms. Architect fees of $98,000, roofing of $200,000, painting $118,000, all sitting at 0 reclassification. A competent engineering analysis identifies shorter life depreciable assets or components inside almost every one of those trades. Specialty plumbing fixtures, decorative finishes within the painting, architectural elements that should be allocated under 263A. That allows you to deduct or expense some costs. And ChatGPT dropped all of them into 39-year buckets. The total amount sitting at 0 reclassification is $1.59 million. On a property eligible for the One Big Beautiful Bill or bonus depreciation, that is real money. The taxpayer's leaving on the floor while still producing a study that fails the ATG framework. Here's the part that I want CPAs watching this to pay particular attention to. These trade tabs are not empty. They have the contractor's actual invoices in them, real source documents the client supplied to the AI. That is the part that's really easy to misread. The taxpayer did the right thing. They provided source documentation. The ATG element 3, appropriate documentation, is technically satisfied because the documents are all in the file. But elements 8, 10, and 12 are not satisfied by document possession. They require analytical work performed on those documents by a qualified individual. The takeoffs require unit costs extracted from the invoiced amounts and applied to identified components. Reconciliation requires tracing each reclassified component to a substantiated record. Section 1245, identification requires the personal property. Personal property is what we're accelerating. It's got to be identified separate from the real property using a statutory test applied on a component by component basis. None of that analytical work was performed. The invoices sit in those tabs. The main matrix shows trade level percentages, but the two never touch. This is the practitioner level point. If you are a CPA reviewing an AI-generated cost seg study, finding the source documents in the file does not mean the analytical elements are satisfied. You have to look for the analytical work product itself, the takeoffs, the reconciliation narrative, the 1245 analysis. And if those analytical work products are not there, then the substantial authority for the return position is at risk, regardless of how complete the source documents may look. Now, the third study, and this one is ours, so okay, I'm biased. This is a high-rise apartment, $43.8 million basis, done by our engineering team in 2023. Let me show you the structural differences. 139 pages, bound. Engineer of record named on the certificate. Professional licenses listed in the final report. Both verifiable on state engineering board registers right now. The methodology named explicitly. Detailed engineering approach from actual cost records, combined with the detailed engineering estimate approach. The two highest reliability ATG methodologies used together in one report. Legal analysis are cited, Hospital Corp versus Commercial. There's a number of court cases that are listed in the footnotes of the report as well. And it is a 20-page appendix of different case citations. Component breakdowns run 28 pages. 28 pages of spreadsheet lines. Indirect cost allocation has its own dedicated section. 1245 property versus 1250 property. So again, personal property versus real property classifications is performed component by component. Unit of property analysis, dispositions, retirement analysis, 263A treatment, which means, again, you can expense certain costs, capitalize interest and production costs. It's all there. It's all detailed. That's what the ATG describes when it uses the words quality cost segregation study. It is not a stylistic preference. It is the substance that the framework calls for. The verdict. So let me put it all side by side. We've got 3 studies, 13 elements that the IRS is looking for, and here's how they score. The ETS report satisfies all 13 elements so that it is supported under audit. Engineer of record named, methodology stated explicitly, legal analysis cited, takeoffs performed, reconciliation completed, 1245 property identified separately, and element by element, top to bottom. The ChatGPT report, it satisfies 1, just element 3, appropriate documentation. Because the contractor invoices, they're in the file. But the other 12, they completely fail. No engineer of record, no methodology statement, no legal analysis, no takeoffs, no reconciliation, no 1245 identification. And then the Gemini summary, it satisfies 0. It doesn't attempt the framework because, again, it never claimed to be a full study. And so there it is, 13, 1, 0. And that's not a marketing opinion. That's the IRS quality framework applied to 3 real studies side by side. All right, now let's talk about the actual exposure that creates. Property owner audience, this section is for you. There's something called Section 6662. It imposes a 20% accuracy related penalty on the underpayment when a return has a substantial understatement of income tax. That jumps to 40% in cases of gross misstatement. The one escape from the penalty is if the taxpayer can establish reasonable cause and good faith. So a 20 to 40% penalty if there is an adjustment taken away because what was filed was incorrect. And the leading authority on reasonable cause, when you've relied on a tax advisor, it's a case called neonatology, is what is called the neonatology case. And it affirmed by the third court in 2002, so this was an actual cost seg study, and it sets out a 3-pronged test. What the advisor, a competent professional with sufficient expertise, did the taxpayer provide accurate information, and did the taxpayer actually rely on the advice of a competent professional in good faith? Here's the problem. An AI tool fails the first prong. AI is not a competent professional. Within the neonatology framework, there is no licensor, no Circular 230 obligation, no professional judgment that could be relied upon. And so when the IRS disallows a cost seg deduction based on an AI study, the reasonable cause defense goes and it doesn't even get off the ground. The taxpayer carries the underpayment, and then they have a potential 20% penalty or more plus interest. So the penalties on this can be very dramatic. All right, now to CPAs and practitioners. This section is for you. Section 6694 imposes preparer penalties on the CPA or other preparer who signs a return reflecting a position that lacks substantial authority, or if the position is disclosed lacks a reasonable basis. The penalty is greater of $1,000 or 50% of the fee derived on that engagement. So Section 6694B raises that $5,000 or 75% of the fee that the code calls reckless conduct. The AI CPA statement on standards for tax services, number 1, also sets a practitioner standard. A position needs to have a realistic possibility of being sustained on its merits. The AI CPA has interpreted that as broadly consistent with the substantial authority threshold. And Circular 230 10.22 imposes a parallel due diligence obligation on top of that. So here's the situation. When the client brings you an AI-generated cost seg study that satisfies exactly one of the 13 ATG elements, and then it fails the other 12, articulating substantial authority for the return position is pretty difficult. The position is drawn from work product that does not meet the IRS quality framework. Disclosure on Form 8275 does shift the standard to reasonable basis, but it doesn't eliminate the exposure. And several professional liability carriers in 2025 and 2026 have specifically updated their guidance to address this exact scenario. The practical implication: when a client brings you an AI cost seg study, the appropriate response is rarely, "we'll file it." It's often more, "we'll need an engineering-based study from a qualified firm before we sign this return." Now that brings me back to where the whole conversation started. Engineering firms are routinely being asked to validate AI cost seg studies. A property owner walks in with an AI output and asks me to put our licensed engineering firm name on it. We can't do that. And here's why. There are really two paths. Path 1 is that we actually do the engineering work the AI didn't do. We extract takeoffs from the invoices, we identify the components, we apply the 1245 analysis. But at that point, the validation is the study. The AI output added nothing to the work product, and the client paid for the AI tool and then paid us the actual engineering analysis anywhere. And that's not even to mention doing a physical site visit to validate the assets, which is another component of the ATG guidelines. Now, path 2 is that we attach our licensed engineering seal to the AI output without doing the analysis. And this is foreclosed categorically by state engineering conduct rules. Florida Administrative Code requires that an engineer take responsibility only for engineering work that the engineer performed or directly supervised. Texas has parallel rules, putting a licensed engineering seal on AI output we didn't perform. This is a total violation. The state engineering board can immediately pull the license. So that's the regulatory boundary. But it is also honestly what makes this conversation clean. We cannot validate AI cost seg studies. What we can do is a real cost seg study, and that means the ATG framework. And that's actually where many of these conversations end up, with that being the engagement. The one thing I really want to make clear before we close this video is not anti-AI. Our firm uses generative AI substantially. Research support and drafting and documentation analysis, client communications, and AI is a tool that we've come to depend on, and it's fantastic. But the line, and this is the one thing I want you to walk away with, the line is professional accountability. AI tools cannot be the named preparer of a tax position. They can absolutely be used by licensed professionals who are the named preparer. A cost seg study prepared by a licensed engineering firm may legitimately use AI in document review, in drafting and analytical support, as long as the actual engineering work, the takeoffs, the reconciliation, the 1245 analysis, the site inspection findings, as long as it's all performed by qualified individuals whose names appear on the report. That framing protects everyone in the chain. The taxpayer who relies on the study, the CPA who files the return, and the engineering firm whose credentialed personnel did the work. And it's also the framing that survives an IRS examination. And again, a lot of this is even just bypassing the importance of doing a physical site visit to confirm and validate the installation and use of every component within a given property. Okay. So what to do? So 3 quick practical takeaways before we close. If you are a property owner and you have already generated an AI cost seg study, please do not file the return relying on that. The exposure is real. Instead, have a real engineering-based study performed by a qualified firm. Honestly, the cost is meaningfully less than the penalty exposure that you would otherwise carry. If you are a CPA and a client brings you an AI cost seg study, decline to file the return reflecting those classifications as a qualified engineering study. Document the decision in your engagement file and have engagement letter language that specifically addresses client-provided AI work product, and consult your professional liability carrier on the firm's general exposure to AI-derived tax positions. Several carriers have updated their guidance just within the last year. And if you're an engineering firm being asked to validate an AI study, please don't do that. The state of engineering boards takes this very seriously, and honestly, they should. The right engagement is the engineering study itself. All right, 3 calls to action in the description below. First, there's a full article, which was just published in Accounting Today. If you want to go deeper on any of these points, there's an even more complex article on our blog and on our website. Second, we have a free 5 questions checklist that we put together for property owners that are hiring a cost seg provider, including us. So feel free to comment, send us a message, send us an email. Happy to send that to you. And third, the free property analysis. Within 15 minutes, you can talk with a real cost seg specialist, no questionnaire, no chatbot, and have a conversation about your property. We will give you a detailed cost benefit analysis of exactly what the opportunity is, what the costs are for a study, and what your end result is expected to be. I am Heidi Henderson. I am the CMO, but a tax expert with Tax Services. Thank you so much for watching.